Welcome back to Bazaar Morning Call. It's Friday. Hope you're having a good morning so far. The SGX Nifty is indicating that the start will be in the green. Globally as well, markets have moved into the green. The Dow futures is up about 100 odd points. And the big headline is the positive data that's coming from Amazon. In fact, Amazon for the first time on Thursday declared its advertising revenues. And they said they have $31 billion a year in terms of total advertising revenues. And that really sparked an up move in the stock there. But let's see what happens in our own market. Lots to talk about. Our research team is joining us first up to help us prep for the day. We have ITC that will be reacting to its numbers. You have SBI tomorrow. Hi, folks. Good morning to all of you. Anuj, what are you looking at today?
Two large caps, Sonia. Focus on relative strength on, in weak markets. First is Axis Bank, which is clearly playing a, large catch-up to ICICI Bank. It had underperformed by a huge margin. And I think it's making up for that. And every time there's a decline, it sees buying. So that's my first stock to track. There's something happening in Hero MotoCorp. It's ended a 7 or 8 year bear market, or showing signs of ending a 7 or 8 year bear market and moving on. Again, a stock which on every dip is seeing buying. So that's my second stock to track. It's breaking a bit of a negative channel as well. So that will be the stock to track today.
Okay, Anuj, thanks a lot for that. Well, Agam, coming across to you, ITC. That's going to be the stock that's not been in top form, but from the dressing room, all the bulls are cheering for it. Numbers are good.
Well, as Manglam would put it, it is a smoking hot quarter for ITC. Revenues are well ahead of expectations. We have seen contraction in overall EBITDA margins, but the takeaway here is that cigarette margins have held on, and we've actually seen a little bit of an improvement in cigarette margins, considering that's a big segment. Now, overall, the revenues have risen by around 32%. Margins overall have contracted to around 32.2%, and that's 500 basis points below our expectations. Profit, that has grown by as much as 12%, so not in line with the revenue growth. When it comes down to cigarettes business, we've seen an overall cigarettes volumes of around 12 to 13% against an expectation of 7 to 8%. So this is well ahead of our expectations. EBIT margins for cigarettes coming in around 63.3% against 62.8%. And when it comes to FMCG, once again, we've seen good growth of around 9.2%, though there has been a contraction in margins. A very quick word on the other segments. Hotels, agribusiness, as well as paperboards were the ones with the biggest rise in revenues. In fact, hotels and agribusiness has seen their revenues double on a year-on-year basis, and that's also one of the crucial factors playing out in favor of ITC in this quarter.
Okay, Agam, thanks a lot for that. Well, we have a very interesting research team, right? Those who track ITC don't smoke. Those who track United Spirits don't drink. Yeah. Those who track, all the shrimp and the chicken companies are pure vegetarians. But anyway.
And those who track two-wheelers don't ride bikes.
Well, Sonia, you are in a different universe altogether, of course, so let's not get there. Okay, let's go across to Ekta then. She'll be tracking Lupin, and numbers came really late night, Ekta.
I can't even remember what time they came anymore, but yes, it was a disappointing set of numbers over that. The revenue was up around 4%. The margins were the big disappointment. Reported margins came in at 8.9%. The one-time expense, after you adjust for it, there was a one-time expense of 190 odd crores. Then also the margins came in at 13.7%. Street was anticipating around 15.5%, and this company had guided second half margins at 16%. So it's a 3 consecutive quarters of a margin disappointment for Lupin, and no recovery on a sequential basis. Profit was up around 24%, and that was aided by a tax write-back as well. The silver lining is that North America hit its estimated sales of $200 million. The street was anticipating that. This is versus $184 million Q&Q and year-on-year $188 million, but net debt was higher by $300 million as well. Credit Suisse says EBITDA margin declines to a low of 12.7%. Now margins are trailing significantly lower than the second half guidance of 16%. They have a neutral target price 925. I figure that margins will be the key disappointment today for Lupin.
Okay, all right, Ekta, thanks a lot for that. We'll watch out for the Lupin stock. We're going with red over there, as Ekta was pointing out. Not done much actually in the last 3 months for Lupin. In fact, in the last 6 months, the Lupin stock has fallen substantially. It was about 1150 6 months ago. But let's do one thing. Let's go back to Agam now. He's tracking a couple of more numbers. Agam, what do you have?
Right, so I start off with Adani Power. I have 3 earnings today. Adani Power as well, revenues are disappointing. It's down by as much as 22%, but their margins have improved to 33% because of lower fuel costs. And well, that's also posted a profit as against a loss. and that's largely because of lower finance costs. Moving on to GMM Pfaudler, again a good quarter. Of course, prima facie, we're looking at about a 217% growth in revenues, but that is because of this is inorganic growth, because in the fourth quarter of last year, they got in the Pfaudler acquisition into the fold. Net profit up as much as 39%, and finally coming down to Torrent Power. Once again, it's a good quarter. Revenues have risen by around 27%, but it's also seen its margins contract because of higher fuel costs. All in all, it's a mixed quarter for Torrent Power.
Okay, thanks a lot for that, Agam. Ekta, coming back to you, tracking a couple of more results.
Well, yes, I'm tracking Cadilla, which is going to be reacting to its conference call takeaways. US pricing pressure in single digits. US revenue likely to be muted in FY23, but they're still likely to reach $1 billion in FY24 in terms of US sales. Implementing steps to protect gross margins, which I think should go down well with the street. Zycov D, 12 to 18 age group is an opportunity. Booster doses is an opportunity. Once supplies start, they could see a launch for the children's age group. They will have data to file with regulators by the end of this month for the 2-dose vaccine, and the pricing of the vaccine in the private market is likely to be higher, but right now the private market is closed for Zycov D. Pfizer, green, I expect that stock to probably see some upside because of revenue growth of around 14% year-on-year and revenue growth of 6% Q-on-Q. Margins 28.8%, so it's steady, though it's declined year-on-year, but it's maintained on a Q-on-Q basis.
Okay, Ekta, thanks for that. Let's go across to Sonal. She's also tracking some numbers. Sonal?
Good morning. Well, I'm tracking 4 numbers. Let me start with PI Industries, where the numbers were better than what Kotak was estimating. Revenues went up by 17% on a YY basis, EBITDA growth of 8%. Yes, margins did see some compression of around 20 basis points, 200 basis points that is, and profits went up by 14%. This growth was led by 19% growth in exports and 8% growth in their domestic segment. Prince Pipes, on the other hand, reported something that was slightly muted. Revenues went up by 21%. They saw a volume decline of 11.5%. That means the price hikes were really substantial. EBITDA went up by 8%, margins declined, and profits were flat this time around. Brigade Enterprises, well, after Goldrush Properties, this is the other company which has actually seen a decline both on a quarter-on-quarter and on a YY basis, both for volumes as well as for bookings. So that is something that could disappoint the street. Lease rentals were decent this time around. Retail vertical achieved 100% sales consumption recovery over Q3 of FY 2020. And hospitality, the portfolio occupancy improved on a quarter-on-quarter basis to 59%. Lastly, Sumitomo Chemicals, well, one chemical company where there has been actually a margin expansion on a YY basis, so expect that stock to be in the green. Revenue up 26%, EBITDA up 60%, and profits also went up by 65%.
Okay, thanks a lot for that. By the way, very interesting acquisition by Dr. Reddys. They've acquired a company that manufactures medical cannabis. Where is that going to be used? Ekta will tell us more. Ekta, over to you.
Well, actually, it's used quite largely within the entire medical space, and I'll just give you the stats in just a bit. So they have entered into a definitive agreement to acquire Nimbus Health. It's a private company, wholesaler and manufacturer of medical cannabis, and the company is going to acquire it for an upfront payment plus performance and milestone-based earnouts over the next 4 years. So this is basically based in Germany. It's positive for Dr. Reddys. The size of the acquisition is not known, but Germany legalized medical cannabis in 2017. It's growing at 55% CAGR since 2017, and it's one of the largest medical cannabis markets in Europe. This will allow Dr. Reddys to access other geographies in Europe that will eventually adopt medical cannabis as well. IPCA also is in focus because one of their 2 plants, which is being set up for API manufacturing, has now started trial production. The capital outlay for that was 250 crores.
Okay, Ekta, let's get back to Nupur then for some more numbers.
Well, Anuj, I have a bunch of earnings to watch out for. First up is Lux Industries, where Q3 looks good. Revenues were up 24%, operating profits up 33% on YY basis, and as a result, margins as well improved to 21%. So green out there. SIS, mixed kind of earnings coming in there. 10% jump in Q3 revenues, but margins declined to 5%. Grindwell Norton there as well. Revenues were up 10%, but margins declined to 18%. So watch out for that. JK Tyre, well, strong top line growth growth coming in there, reported highest ever quarterly sales. But on the flip side, quarter 3 looked operationally weak quarter for the company. 900 basis point decline coming in when it comes to their margins at just 9%. Thomas Cook's strong recovery is seen there on a low base, reported revenues of close to 750 crores and a profit when it comes to their operational level versus loss same period last year.
Okay, thanks a lot for that. Well, Sonal, coming back to you, yesterday, Goldrush Properties numbers were quite tepid. Now they're going ahead and doing a deal with DB Realty. The street won't like it, I think.
They don't actually, and that is why I expect the stock to see some further pressure. Just to give you the contours of the deal, the company has announced a creation of 50-50 joint venture with DB Realty, which is the other listed company, and this is for investment in redevelopment projects in the city of Mumbai. Both companies will be investing 300 crore rupees in this particular joint venture. Additionally, Goldrush Properties will also be investing 400 crores in DB Realty for a 10% stake. Now, Jeffrey says that from this platform, the company has given a guidance of around 15,000 crores in terms of top line, 40 to 50% in terms of margin from these projects. However, it means it's a near-term re-rating for the stock given the track record and business of DB Realty. They have cut the target price to 2,000 versus 2,750 earlier, and this is the word coming in from CLSA as well, where they say that they think that this deal lacks merit due to the direct purchase of a stake in DB Realty. They have reduced their target price from 1563 to 1424, and they also maintain a sell rating.
Okay, thanks for that. We'll keep an eye out on these stocks. Let's move over to Abhishek. He has some more stocks in the news. Abhishek, good morning.
Good morning, Sonia. So let's begin with M&M Finance, wherein they have given a business update of January, just the next day that they have given the Q3 FY22 results. So collections have improved to 96% in January versus 95% that they saw in Q3 and versus 94% on a year-on-year basis. So disbursements in January were up about 31% YOY, but it was down about 15.6% on a month-on-month basis. There has been improvement in the stage 2, that is dues between 60 to 90 days, and stage 3, that is overdues, have remained stable. Net stage 3, as per their guidance, is that it will be below 4% by the end of FY22. Just to alert our viewers, it was at 5.6% at the end of Q3 FY22. Yes, back, there are news reports suggesting that private equity group, that is Advent, is working up on investing 7,500 crore in the bank. Now due diligence is on, and the PE player may form a consortium. So Advent is keen on getting on in one or more investors for this co-investment purpose. They'll need RBI permission, given the fact that any stake beyond 10% for a PE needs RBI approval. Just to alert our viewers, CNBC TV18 has not verified this news report independently. Surya, the small finance bank, now the stress galore over there, and it remains very stressed, given the fact that gross NPA ratio is at 10.5% when compared to 10.2% in the previous quarter, and this is despite the fact that they have had a strong AUM growth. Restructured book remained elevated at 15.8 versus 17.75% in the previous quarter. AUM strong growth over there, 24.7% YOY and 9% sequentially. However, it has not translated into any meaningful earnings, given the fact that earnings are on the lower side with a PAT of less than 5 crores. Back to you.
Okay, thanks a lot for that, Abhishek. Manisha, coming